Lebanon's currency has lost over 98% of its value since 2019, plunging the nation into one of the world's worst economic depressions. Once pegged at 1,507 to the dollar, the Lebanese pound now trades above 100,000 on the parallel market, a symbol of systemic collapse. This crisis is the result of decades of unsustainable policies, corruption, and a financial model reliant on constant foreign inflows, a state-sponsored Ponzi scheme. When these inflows dried up in 2019, the government defaulted on its debt for the first time, exposing the country's bankruptcy. Trust in the state, central bank, and commercial banks has evaporated. Depositors are locked out of their savings, and wealth has been destroyed almost overnight. The political elite, entrenched in a sectarian system, have failed to enact reforms demanded by the IMF, blocking access to crucial bailout funds. For investors, the question is no longer about returns, but whether Lebanon can even begin to rebuild. The answers lie in understanding the core economic afflictions at the heart of the crisis. Let's examine those next. Lebanon's economic collapse is defined by 5 interlinked afflictions. First, GDP has shrunk by over 65% since 2019, gutting jobs and state services. Unemployment exceeds 30%, with youth unemployment over 40%. The resulting brain drain has stripped the country of its skilled workforce. Hyperinflation has destroyed purchasing power, prices have soared, and salaries are now nearly worthless. The central bank's money printing to cover deficits only fueled the currency's collapse. Public debt stands at over 170% of GDP, cutting Lebanon off from international markets and consuming state revenues. Banks, crippled by losses from government debt, have stopped lending, creating a credit crunch that suffocates businesses. Small and medium enterprises, the backbone of the economy, can't access affordable credit, stifling any hope of organic growth. These 5 afflictions are not isolated, they reinforce each other, deepening the crisis. The result, an economy in paralysis with no easy way out. Next, let's see how these failures compound. Lebanon's economic woes feed off each other in a destructive cycle. GDP contraction leads to job losses, which further depress demand and output. The government, unable to borrow, prints money to pay salaries, driving hyperinflation and eroding tax revenues. Banks, insolvent after the government default, block depositors and freeze credit, destroying trust and investment. Without functioning banks, businesses can't import, pay workers, or grow, worsening unemployment and GDP decline. Any attempt to fix one problem risks worsening another. Halting money printing could mean unpaid salaries and social unrest. Only a comprehensive, simultaneous approach to debt, banking, fiscal reform, and currency stabilization offers hope. Piecemeal solutions have failed. Hence, Lebanon remains stuck in crisis. The impact is felt across every sector. Lebanon's banking sector, once a regional powerhouse, is now a shell, insolvent, distrusted, and unable to function. Over $100 billion in deposits are locked away, erasing a generation's savings and paralyzing financial intermediation. The energy sector is in shambles. State electricity is nearly non-existent, forcing reliance on costly private generators. Businesses and households pay exorbitant prices for power, draining foreign currency reserves and making local industry uncompetitive. The currency collapse has made imports unaffordable, causing shortages and supply chain breakdowns. Local industries face soaring costs, energy shortages, and a collapsed market, while export gains are limited and fragile. Socially, over 80% of Lebanese now live in poverty. The middle class has vanished. Healthcare and education are collapsing, with professionals fleeing and families unable to afford basic services. The World Bank calls it a deliberate depression, a humanitarian crisis born of economic mismanagement. The damage is deep and lasting, fueling unrest and threatening Lebanon's social fabric. These failures are not abstract, they are lived realities. Let's look at 3 snapshots that bring this crisis to life. Beirut, 2023. A woman holds up her bank with a toy gun, desperate to access her own savings for her sister's cancer treatment, a scene repeated across the country. This wave of bank holdups shows the total breakdown of trust between citizens and the financial system. Tripoli, 2024. With state electricity nearly gone, families pay extortionate rates to private generator operators, forced to choose between power, food, and medicine. The collapse of state infrastructure has spawned a predatory parallel economy, deepening inequality. Bekaa Valley, 2025. A food factory runs at a fraction of capacity, crippled by soaring costs, unreliable power, and a shortage of skilled workers. The owner's daily struggle reflects the interconnected pain of inflation, energy crisis, and brain drain. These stories are not just statistics. They are the daily reality for millions. For investors, they highlight the extreme operational risks and the erosion of the foundations needed for recovery. The crisis is everywhere, touching every life and business. What stands in the way of recovery? Lebanon's economic and political crises are locked in a self-reinforcing loop. The sectarian political system breeds gridlock, blocking reforms needed for an IMF bailout and financial restructuring. Political elites, protecting their interests, resist transparency and accountability, stalling any credible recovery plan. This deadlock fuels financial uncertainty. No one knows how depositors or creditors will be treated, keeping investment away. Social unrest and rising crime add security risks as the state's authority weakens and non-state actors fill the void. The crisis is not just financial, it threatens national stability and regional security. Every risk is interconnected. Political disputes trigger market panics, protests disrupt supply chains, and failed reforms perpetuate currency collapse. For investors, Lebanon is a landscape of cascading systemic risks. Until the political logjam breaks, the cycle of decline will continue. So what would it take to break this cycle? Lebanon's only path forward is comprehensive reform, starting with an IMF agreement to anchor recovery and restore confidence. The financial sector must be restructured, losses allocated transparently, banks recapitalized, and the exchange rate unified. Fiscal reform is essential, broadening the tax base, improving collection, and replacing wasteful subsidies with targeted social support. Reforming the state electricity utility is critical to reducing the fiscal drain and restoring basic services. These technical steps are meaningless without political will. Leadership must put national interest above sectarian gain. For investors, progress on these reforms, not daily exchange rates, signals real change. The risks remain immense, but a data-driven policy path exists. Lebanon's journey will be long and difficult, but comprehensive reform is the only way out of deliberate depression. The world is watching to see if Lebanon can seize this chance for stability and growth. The future depends on action, not promises. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.